Not leave a single cent on the table when it comes to your taxes. You are missing out on maximizing tax deductions and credits without utilizing these simple steps going forward. Learn how to keep more of your hard-earned money, your hard-earned income in your pocket by taking these steps and using them going forward. These untapped tax saving strategies will save you thousands in the future. Get ready to unlock hidden opportunities and reduce your tax burden with these steps and strategies you haven't been using. Did you know that there are over 100 tax deductions, credits, and eligible expenses that you aren't utilizing every single year? You need to start taking advantage of these to reduce your tax bill and keep more of your hard-earned cash in your pocket every single year, starting now. By utilizing this strategy, you're going to significantly reduce the amount of tax owing on your income at the end of the year. This is going to result in a larger tax refund, which can then be used to redirect somewhere else that will be better utilized. This tax refund will take place if your eligibility or if your refunds or your credits exceed the tax liability that you owe. Deductions and credits can drastically increase your cash at the end of each year, and these can be redirected to savings, to investments, to debt repayment, or so many other great options that you haven't been using because you haven't had the cash flow to do so. Keep in mind that these incentives are focused on Canadians who are benefiting society, who are really, in a sense, giving back to society through their actions, through their behaviors, every single year. So in a sense, you're being compensated for your contribution back to the Canadian society. Now let's look at the first area where we could reap these benefits, and that's medical expenses. Within this section, there are 100 deductions and credits that you could be using to then reduce your income tax every single year and increase the amount of cash that's in your pocket by taking these simple steps and actually utilizing these refunds, these deductions on your income. I bet you didn't know that there was that many tax deductions, that many credits that you haven't been using, but you should be, and that's why I want to make you aware of them today. Any payment or any expense on medical that exceeds what your employer covers can be used as a deduction and can be used to reduce your income tax bill in 2023, 2024, 2025, ongoing. There are requirements though on each section, so keep that in mind. Many can simply be done just through submitting your receipts when you're filing your taxes or just keeping track of your receipts in case of an audit. But some do require prescriptions from doctors, so you're gonna want to make sure that you're checking every single time what that actually is pertaining to each medical expense that occurs throughout the year. Now, this calculation is actually quite simple. So you can claim the total amount of eligible expenses up to the lesser of $2,635 as of 2023, or 3% of your net income for 2023. So let's look at this calculation, how that actually takes place. Start off by taking your net income and multiplying it by 3%. Okay, now you have that number. Step 2 is going to compare $2,635 to that number you've just had there and take the lesser of the two. So say my income or my amount, 3%, was $2,300. Okay, now I'm going to use that number and carry forward with it. Now you need to keep track of all of your eligible medical expenses and pool that into one number. So whatever that amount is, you're going to take that and you're going to minus the whatever is less 3% or the 2,635. So take your medical expenses minus that amount and you're left with a net dollar amount there. Now that you have that amount, take that and multiply it by the combination of 0.15 or what the lowest federal amount of tax, marginal tax rate is, and your provincial lowest marginal rate. So whatever that is, it's going to vary province to province. Once that calculation is complete, you have just calculated your medical expense credit, which can now be applied to your taxes in order to reduce your tax bill for this year and for every year going forward. It's going to change as your medical expenses change, of course. So let's look at this real life example of what that actually looks like. Let's look at an individual who earns $70,000 a year gross. So let's take that number and multiply it by our 3%. So their total amount would be $2,100. Step 2 is we're going to compare the $2,100 versus $2,635 and take the lesser amount of that. So step 3, $2,100 is the amount we're going to be using for this medical expense tax credit calculation. Now, over the course of the year, this individual has accumulated $4,000 of medical expenses across various different types of eligible expenses there. So take that $4,000 and subtract your $2,100. Now we have $1,900 and we're gonna multiply it by this combination of the lowest marginal tax rate, the federal one, and also this 5.05%. And that is going to show us what your eligible tax credit is. Ultimately, this individual has $380.95 tax credit that, and unless they utilize this, now the resulting calculation is $380.95 of tax credit. So without utilizing this strategy, they wouldn't have been able to return this amount and redirect those funds to either, again, their savings, investments, or debt repayments. So now that you can see how this calculation is done, let's look at 2 areas where we're able to actually deduct our eligible expenses from in order to actually benefit from this credit. So the first one is dental services. And this actually covers a wide range of things in almost every province. And it covers cleanings, it covers dental hygienists, it covers fillings, it covers all of those dental kind of expenses that you accumulate. And I'm sure you do attend the dentist. I'm sure that you're gonna have a crown at some point or another that, trust me, is not cheap. And you can then be utilizing these expenses against your income tax for the year. The nice thing about this one is there's no prescription needed. This is just a generic expense that you can have, and you simply just have to keep track of your receipts for that and add those expenses onto your tax returns at year end. Now, the second one I want to look at is vision care. So I wear glasses, and I'm sure many of you do as well, and I'm sure you didn't know that you could actually deduct a large portion or all of your expenses when it comes to vision care. And so I want to talk about eyeglasses, prescription sunglasses. All of those are deductible using that calculation I previously mentioned against your taxes. Another one that many of you probably don't know is that laser eye surgery is actually deductible against your income as well. There's no prescription needed for this one, but obviously if you're going to have laser eye surgery, you're gonna wanna have a prescription to actually do this, because what's the point of spending the money unless you need to, right? Now, I did mention eyeglasses, prescription goggles, prescription lenses of any type. You're gonna need a prescription, and this means that you can't just deduct your reading glasses, or you can't just deduct glasses that you chose to get for just appearances. It needs to be prescription based. It has to actually be needed in order for this expense to be allocated towards this tax credit that we're seeking out. Now, keep in mind for those 2 scenarios, you need to make sure that your employer benefits don't cover the full amount, because if they do, it won't be deductible. So whatever amount above and beyond what your employer covers can then be utilized for your deductions. The next one I want to look at is education credits. So this is one I had the great benefit of utilizing for the first 3 years out of my university degree, because I was able to generate education tax credits while I was in school and build those up and then deduct it at a point where I had much higher income than when I was studying. Paying for university hurts and it is pricey, but using these tax credits, it does make it a little bit better, because I know for me, for my circumstances, I was able to actually receive quite a large tax refund in the first 3 years out of my university degree that allowed me to kind of enjoy, or it allowed me to feel a little bit more comfortable about how much I had to spend to actually attain my degree. By utilizing the education credits I built up over the 4 years in university, I was able to reap the benefits of a large tax filing return. Now keep in mind, it must be a designated post-secondary education in order for these credits to take place. It needs to be a place where you're either gaining or upgrading your education or your job skills. In order for this deduction to take place, they need to be a school or a program or anything like that that files and grants you a T2202 document. Now there is a minimum here, so your education expense, your institution expense needs to be at a minimum $100 from each institution. So if you just take one course and it's less than $100, unfortunately this won't be deductible. But if you had, a course at $150 at one school, $300 at another school, $1,000 at a third school, those would all be deductible since they exceed that $100 limit. Now, when we're looking at tuition tax credits, you take the amount that you've paid and you multiply that by 0.15%. The tuition tax credit is equivalent to 15% of your total education expense for that given year. So it's not actually going to change as your income increases, but it's going to be the same number regardless of if it happened when your income was $50,000 versus your income of $150,000. Now keep in mind, if you don't have enough taxable income for the year to actually utilize any credits, you can carry forward these amounts until you want to reduce your tax liability for that given year. You also have the ability to transfer those credits over to a spouse or to your parents, and they're able to deduct it on their tax to allow you to benefit from this amount in that year as well, or to just allow your household to benefit from that amount. I hope you're able to understand some tax credits that you haven't been utilizing and ways to reduce your taxes that you probably didn't fully understand. So stop paying as much tax as you have been and reduce your tax bill using these strategies, because not only are you going to benefit from this now, you're going to have a bit more cash in your pocket, but you can be using that in a savings account or investment account or debt repayment. That's going to accumulate over time, and that's going to drastically increase the amount of income, the amount of cash in your pocket annually and also in the future. Thanks guys for watching. We'll see you on the next one.